with different. So we have from InCred side our CEO and CIO of our asset management business, Mrinal Singh, who has been with the asset management business for long, and earlier he was with the ICICI Pru MF as a deputy managing director, a deputy CIO. We have Satish Kumar, who is our MD and head of research services, and our outside guest is Mr. Sunil Srivastava, who is a very well-known person, and he was Deputy Managing Director of State Bank of India, and he has financed a lot of companies in Delhi, Calcutta, Mumbai, everywhere, wherever you CGM and a more senior role. And he was also.
Devesh, sorry, you will have to be a little more louder. Not able to hear.
Mic was covered. Yeah, so Mr. Srivastava has a very rich experience, and he also has worked with corporates and worked with them on turning them around and helping with SBI's portfolio. Currently, he is on board of a number of companies and also advisor to Edelweiss. So this is our panel. Budget discussion has changed a lot in last years and last 10 years in a very big manner, because earlier each of the heading of taxation used to be debated for long, and people will try to decipher all that. With the Niti Aayog, with the GST Council, and a lot of long-term initiatives, I think discussion on the budget has become more of the implication for industries based on various parameters. So I would request Satish Kumar, who has whose team has worked on analyzing the budget, to present the research view. Satish.
Yes, sir. So what I'll do that I'll present a presentation for you, and then we can take it forward. So budget as the outset appears to be very encouraging for infra spending. Although the fiscal deficit side, we see that fiscal deficit will, 50 bips YOY will increase, rather reduce the 50 bips YOY to 6.4%, which is an encouraging sign. Although the bond markets has reacted negatively because of the fear that there will be a lot of borrowing by the government of India. But having said that, on the revenue side, if you see the budget, then you will find that there is a lot of conservatism that is built in, particularly on the tax revenue side. The assumption of tax revenue received, there is a lot of conservatism built in. Also, I'll say that on the divestment side, there is an amount of conservatism. So taking all that into account, and taking also the fact into account that we have a very buoyant GST collection that is going on. For the month of January, we had around 1,40,000 crores of GST collection. So in that regard, I think that the bond market fear will be assuaged over a period of time. Maybe the short term, short end of the yield curve goes up for a time being, and then it will, as the revenue collection picks up over the period of time, it will stabilize. So I don't think that will be a big risk for equity market as such. The big positives that we see for the budget side is obviously on the infra spending and the government spending side. Private sector capex is up to a stage where it will start building up, and we will see for the first time in last maybe 12 or 14 years that it will start picking up. We are seeing signs of that on the private capex side, but it is very good that the government has also chipped in. And if you see our second slide, then the government expenditure for 2022 and 23, rather, I will show the capital expenditure of the government that is likely to increase by around 32% CAGR over FY21 to 23. Now, this is a big boost for the total infrastructure investment as such, and there are multiple sectors that can get benefited out of it. The one that comes easily into mind is infrastructure. Infrastructure companies, obviously, there will be some benefit accrue that will to building materials companies. They will also likely to be get benefited out of it. Also, to some extent, cement and the steel consumption in the country will also pick up. So that is another, that can be the another beneficiary, particularly on the demand side from this government post as such. While on the rural development side, if you see, government has steered clear of any populist measures. They are not giving any freebies as such. People are slightly worried about Manrega expenditure down YOY, but Manrega is we need to understand that Manrega is a demand-driven scheme. So if there is a demand for Manrega, expenditure, states demand for it, then obviously it will go up. We saw that in FY22 and we saw that in FY21, and if there is a demand in FY23 as well, it will again go up. I don't think any government will shy away from increasing Manrega expenditure as such, and this government has shown, particularly in FY21, that given a need, if the need is there, they go all out in sustaining that kind of expenditure. Other area which has got a lot of boost from the recent initiatives from the government of India is defense. And particularly this time around, if I see that the capital expenditure on the defense side is 1.5 lakh crore, which is around 10% higher than last year. But the key point here is that the domestic component of that will be now 60%, around 58 to 60%. So that will be a big boost for the Indian domestic defense companies. We are seeing a lot of new listings in this space. There are age-old companies like Bharat Electronics, Hindustan Aeronautics, etc. And there are multiple small companies who are doing particularly well. So that is another area that will get benefited from this budget. So all in all, I'll say a positive budget, a very positive budget, which is I'll say a growth oriented. There can be some slight misgivings or fear in the market regarding the borrowing, but as I said, over a period of time, that fear will get assuaged. I'll stop here, sir.
Okay, great. Thank you, Satish, for your presentation. Mridal, in your mind, what are the issues that are top? Like global situation, inflation. Many people say that we are going towards stagflation. So do you have any concerns, or do you agree that this is a good budget and everything looks good? Mridal, you are on mute.
Sorry. So my views on budget are pretty simple. I think the government has continued on its consolidation of existing reforms that they have been on last 5-7 years since they have been in power. So there is no incremental big bang reform that got announced. There was nothing done on the direct tax side. So I think they didn't want to disturb the status quo. There is a semblance of stability that is finally seeking in. I think because the indirect taxation is now a part of GST Council, it is no longer part of budget. Railway budget has been blended into the union budget. So what we see now in the budget is largely, in terms of incentives that the corporates could draw. I think the corporate tax for new capex is already at 15%. I don't think it can go lower. So it has hit I would say, lower ceiling over there. I think the direct taxation is in a zone which can be comparable to Western world largely. So I think over there also the government has shown stability. I think the government was very clear, although they don't voice it that way, but to me it appears very clear that they were hell-bent upon meeting the fiscal deficit number of 6.4. And for that, I feel that the revenue estimates or assumptions that the government has pulled out are a bit conservative, particularly if I see for last 4 months, our GST collection are in excess of 1 lakh crores. And if I notice the GST projection, they are talking about 7.8 lakh crores for the coming fiscal, which translates to 65,000 crores per month. I think is a bit conservative. There is a very good chance that things could be better, because if economy picks up, I don't see a reason why we might not continue on the 1 lakh crore plus trajectory. So there could be surprise over there. Talking about global inflation, so there is the botheration about inflation is the imported inflation. So crude is at elevated levels, but our if you notice, our services export, particularly IT export, for first time since I've been tracking in 25 years, we have our IT exports exceeding the crude imports. So we are able to fund our crude. Now that's an excellent position as an economy. And I think crude by itself, given it is fossil fuel and the world has committed itself to go into, go out of carbon emitting consumption of energy, I think it is imperative that crude cannot have a very long-term elevated trajectory, and that's good for India. But is there inflation that something that I would worry about? I think the supply side constraints, particularly of the global supply chain, let's say freight or microprocessor and the like that we keep hearing. I think that's a very, I think as things normalize, things should be okay. But the core inflation, particularly for even in the projection side and as well as for last 2 quarters, has been within the range of what I would call RBI tolerance, which is 4 plus minus 2%. I think that's encouraging. The bond markets got a bit spooked when they saw the 34 lakh crore expenditure and non-boring revenues receipt of 22 lakh crore. I think as semblance was since there will be more comfort around there. Finally, what really matters is, do we see growth on the anvil? I think there is a very robust, bold step that government has clearly articulated, and that's so the words that matter in this budget, the 3 words that matter in my estimate, is capex, so capacity expansion. The second word that matters is green, and the third word that matters is growth. So I think these are the 3 words that the budget speaks about, and the entire budget is talking about, in a way, dovetailing into these 3 words in my view. I would say inflation, stagflation is definitely not something that in India we have to bother about. We have inherent growth and latent demand. I think if we expand capacity, invest into the economy, and we are rightly placed in that perspective, and private capex kicks in, which there are very clear signs, at least in quite a few sectors, and the green capex, I think we are geared for growth. All the estimates could look, conservative, and I think could be far better than what most people are estimating.
Thank you, Madam. Mr. Srivastava, what comes out is that people are very positive and feel that we can take the inflation and other things in the stride, and overall this budget has put conservative numbers. But you have been a banker and you have been looking at the impact of budgets on corporate health. So first, I would like you to tell the audience here about your views on budget, whether this will be inflationary, whether funding of corporate plans and all will become more expensive, or how things are going to look. Over to you, sir.
Yes, thank you, Devesh. I have been a banker all my life. I've neither been a politician nor an economist, but I've been a keen follower of both politics and economics. So given that background, I'll take you back to the context of slowing down of the economy prior to COVID and the slowdown which happened during COVID. Obviously, in these very despondent times, the budget which spells out a vision of the future is quite aspirational, but at the same time, it sort of infuses a spirit of positivism. And for any economy to actually spur into growth, you will realize that apart from economic conditions, the economic spirits are also required to be harnessed. So to that extent, while one expected with the the elections in Punjab and UP, etc., that there would be more freebies. Fortunately, this budget has actually reinforced what the present government is trying to portray, that it is going to deliver, and to deliver on demonstrable projects. So I'll take you back to the National Infrastructure Pipeline. And out of that, they called out the project Gati Shakti. Now, those Gati Shakti projects are being monitored on a daily basis. And there are almost, 360 layers of maps, which everybody can actually track on a real-time basis to find out solutions. And earlier, given my practical experience in infrastructure financing in this country, while pious intentions were there, announcements were there were a lot of hiccups at the ground level. And the ground level hiccups required interministerial coordination going up to the EGOMs and everything. But net, 90% of your project was either time overrun or cost overrun or both. So this project Gati Shakti, which rests on these 7 pillars, actually reinforces the government's determination to deliver what it has promised by what is actually can be seen on the ground. Now, towards that extent, they have steered clear of not opting for freebies before the election. They've also steered clear of maintaining the tax regime stability. And then in the given situation where private sector investment or rural consumption or private sector consumption was quite muted, I don't think the government had any option but to increase on the capex, and they have done it very wisely by focusing on what is easily demonstrable and easily achievable in the next 1 year. So, for instance, announcement of a 25,000 kilometer increment in the road network and an allocation of 60-odd thousand crores, which is increment of around 52% there. Now, if you're looking at 25,000, 20,000 kilometers of road network, you are actually looking at almost 300,000 crores of investment. Now, even if you adopt the HAM model, hybrid annuity model, you're looking at a banking sector growth of at least 1 lakh to 1.2 lakh crores of bank money being disbursed. Now, when you're looking at the road projects, road alignments, and these are new alignments. These are new alignments with which the government is talking about. So land acquisition itself and the money that it gives into the rural sector actually spurs the rural consumption. And you can go to any village in even in Bihar, for instance, and you'll find that the consumption of people where land has been acquired for road network, actually you'll find more raiment shop in Betia selling costlier suits than in Patna, or for that matter in other tier 1 cities. So that plus the labor, the employment that it generates. See, one criticism of this budget is that it has not been able to focus on employment. So either you go in for direct employment, provide employment which the government can't do, you go in for universal basic income, which it is not in a position to afford, or through this investment capex expenditure, you are able to create employment. And that employment itself will actually spur the rural consumption. So to that extent, the extent that it has focused on capex expenditure, be it in the road sector or the railways. For instance, you have 400 of your Vande Bharat trains. That will require a lot of steel. That will require a lot of stainless steel as well. When you're looking at all the expenditure there, the transport sector, which is easily visible to the common public, which is easily deliverable in a short span of time, is what is being focused at. But beyond that, if I were to write down what I would like to be done in this country in the next 5 or 10 years, I think the FM has listed out everything from a digital university to electric vehicles to charging stations to, a national registry of land records to a national digital health record. So I don't see anything missing there. Now you can say that it's not going to be delivered over a period of 1 year, definitely. But then it's directional. And if the direction is carried forward, as we have seen in the past, in India's 75-year history, I don't see any major overall of the direction that has been set by the previous government as well. So this will be a continuity. The fact that this government is focusing on delivering good projects which are discernible and visible is itself very creditable. And the fact that they're talking in terms of ease of business and ease of living. I'll tell you two small things which was pointed out in the budget. Most of the infrastructure projects are more, they go for a problem because their bills are not paid on time. And then they go for arbitration, and then they go for award, and they go for appeal, and then they go for conciliation, which is an endless process. We have various EPC companies, especially in Hyderabad. The nation builders of Hyderabad have all gone for a toss. Now, in this budget, I don't know whether you noticed that 75% of the bills have to be paid on receipt within 10 days, and that too electronically. So this is a major step. Now, this should be followed. It is there. It is announced in the budget. I hope they make it mandatory for every public sector institution and every regulatory body like NHI or whatever to ensure that these payments are made. Once these payments are made, automatically the economic cycle is faster. Similarly, when you look at most of the bid bonds are getting costlier. The banks are not able to give the bid bonds to the EPC companies, but then you have now got a surety bond coming in as an alternate to the bid bonds. So there are measures which have been taken to facilitate a faster growth of the economy. So I would say that it's in the right direction. Whether the revenue targets are conservative, I agree with Mrinal. Yes, when you're generating 1.5 lakhs crores in the last month, there's no reason to believe that you will be only generating 65,000 crores. And that too, when you're doing it in a muted COVID environment, will it not grow up? Definitely, I think they are going to be under promising and over delivering, and that gives me hope that despite the increase in the interest rate scenario which we are talking about elsewhere, and also the fact that fuel, oil prices remain the joker in our Indian economy. You will have noticed a small point there that they have given a variable pricing for blended fuel. So that all is in a direction to there is a method to this budget. It is not populist, and whether it be popular will depend upon their ability to deliver. So that's my take on it.
Very comprehensive, very well presented, sir. So what comes out of your statement is that now if Raymond is selling more expensive in Bettiah and not in Patna, means at national level, consumption is moving away from certain cities to far off places, and that is going to become stronger. So I think
my limited point was that there is a lot of wealth in tier 2, tier 3, where land acquisition is happening. And that is getting into conspicuous consumption, that is not getting into investment. Now that needs to be harnessed for investment as well. So there is a lot of wealth there. And that will be generated to this 25,000 kilometers.
Yeah, so Mrinal will harness that for investment in viable projects. And one more question, Mr. Srivastava, since you are from banking industry, green bonds, on that you have any opinion? And second is the digital rupee. That is far away, but on these two, do you have any thoughts? Then we'll
So I think it was a very clever move to introduce that 1% and 30% tax on digital coins and distinguishing between currency and coins. So that was a very clever move, which means that one, they are going to be formalizing it in the economy sooner or later. Okay, that is one. And number two, they are saying that the original currency will only be those issued by the central bank. Now, whether central bank will be able to issue it in this financial year, I doubt it very much. It will require a lot of effort. But one thing is very clear, that we are not, negating the cyber, coins totally. That is one. On the green bonds, since, in one of my roles, I'm also a senior advisor to the World Bank. And green bond is a very favorite thing which is happening. This country will require a lot of money. So right now, when we are looking at the, the credit deposit ratio of most of the banks or the banking system as such, it's probably below 65%. That leaves a headroom of at least 20% for growth here. That 20% of growth doesn't mean too much. That can vanish in a short span. So we will be requiring a lot of funds. And the recycling of completed projects and generating, debt through that, that is going to be the way forward, because obviously the differential in the interest rates outside India and the demand for India will always be there. I was hoping that they would have, align somewhere the taxation on the bonds, but I guess the bond prices which have gone up in the short term yesterday, in the long run, perhaps this will correct, and the revenue estimates are going to be, we are definitely going to achieve that. That is my view. And expenditure, of course, if we are on track, and overall, there has always been a cutback on capex if there's a cutback on revenue. So this time, since they're focusing on capex only on Gati Shakti projects and projects which are identifiable, I don't think there'll be too much of a cutback there. But I guess we won't have too much of a shock on account of the rate increases in the West. We have developed our resilience, and regularly, I would assume that our rate increases, which would be there in the next year or so, while everybody is talking of 3 to 5 rate increases here, in India, that will not be as commensurate as the West. Probably it will be lesser because of the government borrowings. They have the compulsion to keep it low.
Excellent. Mridul, domestic money into equity market versus international money. Do you think because of Fed and all taking certain actions, will that impact Indian market? And investor segment wise, how do you look at various segments like domestic institutional versus retail versus HNI and FPI versus domestic money? You are muted, so you can unmute and talk.
So very interesting discussion. So the data, this is a question for which data is there. So let's look at institutions. The domestic mutual funds have an equity AUM of roughly 11 lakh crores. And we have between the HNI products like PMS, AIFs, another 2.5 lakh crores. So give or take some, we are talking about 15 lakh crores of domestic institutional equity monies. Then there are, there are FI investors. If you see the broader breakup, 50% of the Indian listed Indian equities is held by the promoters themselves. So what that means, the likes of the promoters could be, let's say, for example, a Unilever in Hindustan Unilever, or even a promoter at a local level as well. So the remaining, 50% or 49% to be exact, is largely split between retail, and when I say retail, I mean individual investors, and DIIs and FIIs. So DIIs have swelled to 25% of the market, where they used to be 20% 7 years ago. And at 20% they were matching the foreign institutional investors. So when we say we are a 3 trillion economy, we are a 3 trillion of market cap on the listed numbers, we are talking large numbers, but then slowly the trend is very visible. The retail investor has incrementally allocated more savings towards the financial products, equities being one of them. And that trend of financialization is on. And from 15-20 years ago, where we used to see the FIs used to be the big gorilla in the room, I think the domestic institutions have clearly become the bigger gorilla in the room. And that is only going to get better. That does not mean that FIs don't matter. It is a very important segment. A lot of these long-only FIs are required, as Sunil sir said. We definitely need as much capital as we can to invest in our economy. For lack of capital, a lot of investment and growth can get constrained. I would say the domestic capital itself is growing at a pace, or domestic surplus capital, which is investable, given the demographics and incomes moving up, is growing at a pace that itself represents an opportunity and is going to be very large and meaningful going ahead. So no doubt about it, domestics incrementally are becoming bigger, and that trend will continue. FIs continue to remain a relevant player in the market. As we see number of companies, new entrepreneurs coming in, as we see a lot of unlisted businesses going into listing, I think this is only going to expand. The representation of industries in the listed space will create more opportunities. But the growth in the economy is going to create more need for capital, and the businesses are going to tap both in the bond markets, equity markets. Indian equity markets are amongst the most vibrant markets in the world. There is, and we have a very long history of accommodating and being very friendly to foreign institutional investors. That goes all the way back to mid-90s. So the transaction and the method of investing into India is very well known and accepted. The taxation precedences have been set over there. The domestic capital has joined the bandwagon in the last 5-7 years in a meaningful way, and that's going to continue. I see no change in that financialization trajectory.
Excellent. So global shocks will be taken in its own pace by Indian markets, and we have become domestically also the money has matured and it is coming to equities. That's what you are saying. Yeah, that's very comforting. Satish, you mentioned
Devesh,
about
sorry, can I just announce that the participants can ask questions if they want on the Q&A box?
Yeah, so yeah. So you can announce that. Yeah, participants can ask questions and we'll take them. Satish, on sectoral side, while we have talked of infra and a lot of other things, there's a view emerging that for education sector, not much has been done. Do you agree, or you feel that we have done enough skill development and education?
I think direct per se allocation as such, if you ask me, they have not spelled out in the budget speech as such, but the allocation is there. And it need not be a big, a big number as such, as Sunil sir was saying, that if you are doing capex in the economy and the money is going to the individual people as such, then by natural, Indians invest only in basically in 2-3 things. First, they will build a house, then they will educate their children. These are the 2 things that we do normally. Yeah. So by definition, that will happen. The key thing is bringing growth in the economy, doing capital expenditure, which the government is doing.
Mr. Srivastava, there was a very interesting announcement on education side that foreign universities can operate in GIFT City, and they will not be regulated the way domestic educational institutions are regulated. Do you think it has some implication, or what will be your view on this?
I think GIFT City is supposed to be an international financial center, not an international education center. So a foreign university opting to come into GIFT City, I would take it with a pinch of salt. It's biased, very good. You are saying that no regulations will apply, please open. Some of them may open, but then it's not only the name of the university, it's also the faculty, it's also the entire infrastructure and educational support which is required. And GIFT City is, I think they're doing very well on the GIFT City. I see the staff, etc., have been very, very cooperative, very proactive actually. But I would abstain from being very, very encouraged by this thing, because if you have to allow foreign universities to come into India, you might as well allow them whole hog rather than doing it selectively.
Yeah, so probably that could be the next step after bringing them to GIFT City. You never know. That could be the second step, bringing them in. But in GIFT City, the teaching staff you mentioned, So what if they stay in the domestic tariff zone and teach from India only? Because it is found that cost of education, providing education in India is much lower than in Europe and US. So if they shift a couple of their campuses and people live in domestic tariff but go and educate themselves in.
So actually, if you the academics, one, there is a dearth of good quality teachers even in the West. Number two, if they are going to be shifting their base from the US or Europe to India, obviously they are not doing it for charity. They are looking for, and they are not doing it forever. So they can come in for a visiting setup, take a course for 1 month and go back. That itself is very discontinuous. So people have tried it. Ashoka University, for instance, tried it with UPenn. They had the faculty here to train the Indian faculty, but now they don't have too much of faculty from the University of Pennsylvania. They have the domestic faculty now. Similarly, Flame is trying to do this. So I think we have the capability to do it, and we have several, teachers and professors of international repute outside India who could be encouraged to take classes in such universities in India. But getting a Harvard or an MIT or a Stanford or a Princeton or a Columbia or a Brown, or for that matter, a Amherst, to come and set up a campus here, I think that would be far-fetched. It's still not ripe, because obviously they gain by getting the students there. So they'd rather open up their admissions for Indian students rather than come here, because there the university gains as well.
Yeah.
So the university doesn't gain by coming to a. That's my view. I'm sure you people are better informed, but.
Mrinal, any opinion on education and government's contribution to improving quality of education? Because Samarjeet is asking from the audience whether the focus on infra and capex on other areas take away focus from education. So you have any thoughts?
So I think there are three fundamental rights that got introduced in the last government: the right to information, right to education, and right to 100 days of employment. So Manrega is one of those demand-based. So actually, right to education, I think the primary focus of government for last 2 decades has largely been to provide capital for primary, secondary education and facilitate private or entrepreneurship into higher education. So in my view, I think that's a trajectory that government continues to walk, and that would be the right thing to do. I think the right to education, my focus and my emphasis would be primary education, middle school education, high school education. I think there is a lot that needs to be done even there. We have a lot of NGOs and government bodies engaging there. I don't think we've reached desired literacy level in being able to be at for a long period of time. We had, and I think we still do, midday meals to be able to get kids to school. I think the finance minister also mentioned, that there has been a prolonged stay away for school children due to Corona, which is not a good thing. The society is starting to bother about it. I guess although there was not much mentioned in the budget, but then the allocations continue to remain. Like housing, education finds priority in government scheme of things, as well as a dedicated ministry to it. There is allocation to that ministry, and that allocation largely means that it is going towards school education, be it primary, be it secondary. We've seen innovation by some state governments in the delivery of education, particularly Delhi. A lot has been talked about it. We get to hear good feedback about it. I think that's something that the government.
Okay. There's another question from Samarjeet Tupalji. So I'll request Mr. Srivastava to answer this. Will Gati Shakti give better performance efficiency to CAPEX projects did we have a lot of leakages and inefficiencies before the Gati Shakti idea?
As well, that there were a lot of leakages and there were a lot of time and cost overruns in most of the infrastructure projects which have been, led in the past, and principally on account of the lack of coordination between different ministries. So, for instance, if you are building a road alignment, you will have it will have to go through various states. You will probably have an area where you may require a railway overbridge or the transmission lines to be shifted. Now these would have to be coordinated with different bodies. You also have this it will be on the outskirts of municipal limits, so there will be some other body coming in. There would suddenly be a temple in the middle of the road or the alignment, and then you have to have a diversion there. Or you'll be required to, plant. You need to plant 2 trees for every tree that you cut. So you have a requirement for planting maybe 200,000 trees. Now decisions on these were delayed for years, and there was no centralized decision making. And there were a lot of interministerial coordination. There were EGOMs and whatever, but no decisions took place, and projects were delayed. And most of the EPC companies suffered on account of delayed payments. The scope of the projects were changed. So that being the case, people had lost faith, and therefore you change the financing model from EPC to annuity to toll to now what is called hybrid annuity. Now in this case also there have been delays, but if there is a single point of decision making and monitoring as to what is impacting or impeding the project, and a decision is taken at the coordinated level, obviously the implementation will be faster. So I guess that is why they are focused on some of the projects of the national infrastructure pipeline and not all of them. So they are taking focused attention on a few projects, completing it, and then adding on as the case may be. Does that answer your question?
Yeah, so I'm sure Samarjit must have liked the answer. And so next, Mrinal, why the government is not trying to increase tax base? There's nothing like even today, the tax base is very small for direct taxes. So there's a question here on that. And the other question which we all should be thinking on is FM's speech has covered all the aspects of areas which need to be addressed, including digital currency to green energy to everything. So is that something that can be implemented, or that is just a dream? So Mrinal, first on tax base of India on that, and then we'll all look at whether we feel FM was creating a dream or that dream is achievable.
So at least most of us who are in the audience or on the panel, it remains a dream. But I hope the tax base expands. Time and again there is thrust given on it, but it remains a fact that a very small percentage of populace actually pays tax, and that's a fact. And the finance minister actually began the speech with thanking the taxpayers. So we can be happy about it, that there is at least acknowledgement. Hopefully there will be an expansion. I guess it's a democratically difficult decision, but at some point it will be done. I'll rest it at that. Not my domain. This is the domain of the sovereign. Sovereign has to decide. It is a political decision. But to your second question, Devesh, I think they did address everything that they wanted to the roadmap. The budget speech is actually the intent of the government. The budget details are in the finance bill, which needs to be passed by the Lok Sabha. So the intent of the government, I think, very clear. I think since the time I am hearing Sitaraman as finance minister, she's never talked about the defense budget in the speech, but it is the largest component in the expenditure of the government. But then by not talking about it does not mean it is not an important element. Similar thing applies to education. We had that discussion. There is allocation to that ministry. So what really matters is that budget speech, at least for the last 5 years, is largely an intent statement, coupled with the details in the finance bill that is proposed. I think it is holistic. The priorities of the government are very clear. As I said, they want to step up their public infrastructure investment. That is the job of the government that drives and spurs job growth and economy. I think they are going back to that. They are very, very clear. They want to incentivize and nudge private capex to join in. That would be capacity creation, particularly in the industrial zone. And they are keen that, the new capacity creation that happens, new job generation that happens is in the green space. It is more sustainable, it is more eco-friendly, and it is environmentally friendly and things like those. So I think that remains, and they have put money and words and intent behind it. That's a good sign.
Yeah, Mr. Srivastava, you have any views on the speech and our ability to implement it?
So it was the shortest speech. That is one. Short, crisp, and journalistic. The devil lies in the implementation, definitely. And that's why there is an element of under promise and perhaps with the expectation of over delivery. Please remember as well that 2024 is the year when they will be tested at the elections. So normally in any tenure, this is the mid-year where a lot of heavy lifting is done on visible projects. And the year before the elections, obviously you will have what is required to be done by any political party. So to that extent, it is essential that they complete the projects to generate the revenues to be able to do what is required in 23-24 budget. So I would say that there will be a lot of effort going there. There will be a lot of focus on getting things done. We have seen many a slip between very pious intention and the actual situation in the ground. But I think the way it was presented and the focus that it has generated, I would assume that let us give them an honest attempt. I'm sure they'll be able to deliver if they are focused. There's nothing which is not reachable.
Excellent. And so we have already completed over an hour. So we'll wrap up in 5-7 minutes. So last question that many people have is direct tax should be, or income tax, personal income tax should be done away with, and there should be only indirect taxes. Does the panel believe in it? So Mrinal, first you, and then we'll go through other two questions.
Yeah, I think all direct tax assessees would love to see that. It's not for us to decide. I think currency and taxation are sovereign rights. In one form or the other, it will be there. So there's no merit in having an individual view about if you ask any individual, any corporate, they will always want the taxes lower or done away with. But I mean, how will the government run? I mean, that's also reality. Not something that is our domain to even discuss. I think that's the right of the sovereign. They will exercise it at their will.
Yeah, Mr. Srivastava, you.
Yeah, lower taxes are always welcome, and lower taxes always lead to greater compliance.
Yeah.
So you will have, you won't have incidents of people shifting to Singapore or Dubai to just for taxation purposes. So our tax rates, while at 43-44%, compared to some of the, even in the United States, the highest level is probably 47-48%. But then there are a lot of things which are taken care of by the government there, which are not taken care of by the government here because of historical reasons. So to that extent, yes, I would be happier if the peak tax rate for individuals was not 44% and for corporates not at 25%. So you have a situation where a corporate is being taxed at 25% and a new one at 15%, whereas an individual at 44%. So this needs to be corrected at some point. you had clamors of some left-leaning economists talking about wealth tax and inheritance tax and all. I don't think that is thankfully the government has not paid much heed to it, because it will just lead to more of non-compliance than anything else, and again you'll have a cost of tax administration. But yes, I was just as an aside here, in a country like Poland, the accounting system is standardized. So even if you are an individual, you have to work on that accounting package only, which is linked to your bank account, and whatever credits come to your bank account and whatever income, etc. And on a monthly basis, your income tax is debited. So the cost of tax compliance and administration is next to zero. Yes, I would ideally prefer, as Minal mentioned, that more and more people could get into the tax net and definitely paid income tax. But yes, every sovereign has also political compulsions.
Yeah.
So we'll let the sovereign decide as it matures.
And we discussed about the government expenditure, and we didn't spell out particularly fiscal deficit in as many words. So fiscal deficit is high. And so Satish, what do you think this fiscal deficit is this time? Why people are not raising voice over high fiscal deficit and everyone has accepted it? And is it going to remain something which will be acceptable at these levels in the future?
No, obviously they have a target to bring it down to below 4.5% over the period of time. But having said that, in a country like India, we need fiscal deficit. We can print money, and if we can get our taxation and our growth in line, or growth happens at a decent pace, then you are fine with it. If you are running fiscal deficit, high fiscal deficit, and giving money as a freebie, then that is a problem. But if it is going in towards capacity creation, capital expenditure, then that is absolutely fine, because ultimately that will pay for itself in the coming future.
Yeah. Mr. Srivastava, you have anything to add here?
Yeah, borrow to invest is all right. Borrow to distribute and spend is not all right. So this government is, and they're trying to reduce the fiscal deficit. But yes, it's not like a household budget that I'll spend what I earn, or I'll. So there'll be an element of deficit in any case in sovereign budgets. Yeah. But as long as they are borrowing to invest in creating further growth, that is acceptable. Within limits, of course.
Excellent. Mrinal, you also agree that fiscal deficit is tolerable if it is going to create capacities?
Yeah. So as long as you create assets rather than spend it on la grass, it's desirable in a range. I think that is a general wisdom.
Yeah. And what is observed is that because of whatever reason, the efficiency of public expenditure has improved in the last couple of years. And earlier, say, for example, Manrega, that was also something where, other than capital creation, it was a means of transferring cash to unknown set of people. So now with the Jan Dhan accounts and everything being linked to bank account, the efficiency of public expenditure has, and of subsidy also, has improved a lot. And the inflation intensity of public expenditure or excess expenditure has reduced. So it doesn't cause same level of inflation, because earlier cash used to be slush in the hinterland because of either subsidies or public expenditure. So I think that is a big change. And with the tax buoyancy, like GST, there we are seeing that tax buoyancy is improving. And with that improvement, fiscal deficit should be under control. So I think with this, we would like to bring this discussion to an end. And we are very thankful to the panel, where the message is very clear that India has come of age. Now Indian capital markets and Indian equity markets are having a lot of domestic internal support, and therefore the link with the Fed's action, although it will not be abolished, but it will remain there but it won't be as severe as it used to happen earlier. This year being a extraordinary year where COVID is being fought, fiscal deficit and expenditure, all that is acceptable. And hopefully if normal times come, then government's expenditure on providing food to everyone may not get extended beyond June, and that will create a lot of saving. And in between last budget and this budget, there has been a very big change in the sense that Air India has been privatized, which when this government was formed 2014, and one of the ministers, he was asking how to privatize Air India. And I asked a lot of people, and they said, no way, it will not be politically feasible to do it. So in India now, things which we thought that is not possible is happening, and that creates a big hope. We are very positive about investment in infrastructure or expenditure on infrastructure by the government and boost to that. But I was looking at the Nifty Infra Index between last budget and this budget. It has gone up 32.6%, which is a very good return. And so is Nifty Realty. So real estate index has gone up 50.38% up, which says that although it was not stated in the budget, but things happened in this space. And now that it has been mentioned in the budget, like a lot of good things may happen, we should be ready for a positive impact on investment climate. And with that, I bring this panel discussion to an end. Thank you very much, everyone, for participating. And thank you, Mr. Srivastava, for being here.
Thank you, sir.
Yeah, thank you.
Thank you.
Okay, thank you.
Thank you, everyone.